What's up, everybody? How's it going? I am Deonte Burden, aka Mr. Short Dollar himself, doing a quick live feed this evening. I just got in from the office. You guys know it's beginning of tax season. I'm a tax accountant, and we had just want to do a quick live feed to talk about the top how to avoid the small business tax audit triggers. Okay, you have a lot of things that start audits up with small businesses, and each and every year we get calls all the time about people that's getting audited because they have put something on a tax return that they thought was right, they heard was right, or they wish was right. And what I want to do a quick live feed tonight, guys, discuss how to avoid small business tax audit triggers. Right now we're streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter right now. Real quick, give a quick disclaimer. I'll go over anything as far as I see in the TikTok. Somebody asked about new grants for veterans. After we talk about discussion in regards to the small business audit tax triggers, I'll revisit everything. Anybody got any questions outside? I'll open the floor up to answer any questions that anybody may have. But right now, I want to discuss some things that always, was probably some of the most common triggers that I've seen for our small business audits over the past 20 years. And a lot of these things actually I can see right then and there as soon as a new client or even the current client may give us their financial statements. And I'm like, you sure this right? Now I can only take what you give me. You sign, the agreement that these items are correct. You've got your P&L statements, or your expense listings and everything like that. We're going to take that information from you. But at the end of the day, that's just, to protect us. But, some things I can just see glaring like, hey, man, this doesn't look right. So what I want to do, again, share the information with you guys. Again, we're talking about how to avoid small business tax audit triggers. Again, this is Mr. Short Dog, where we talk about personal finance, business, entrepreneurship, and investing. And one of the first things that trigger audits with small businesses is failure to report all your income. Here's the problem with that comes up a lot of times. A lot of times when you have a small business and you're doing different jobs or different things, a lot of times you may have get a 1099, or you may sign up as an independent contractor for a particular business. The issue comes up, you may have forgot you gave them the W-9, and at the end of the year, they'll issue out 1099 or 1099 NEC as an independent contractor, 3, 5, 10,000. You may not necessarily remember the job because you just worked for them for a couple of weeks, did a gig here and there, or you may have done several jobs and you just don't remember everything you've done. The issue comes up, you go to try to file your taxes yourself or go to your accountant. You forgot all the information because you haven't been maintaining proper books, which is not uncommon for small businesses. And taxes are filed, taxes submitted. You're, living life, everything's fine. Maybe 6-7 months after you filed it, you get a letter from the IRS saying that your income was understated because you didn't report a 1099 that was issued out to you. You may have received a 1099 late, or you may not have received a 1099 at all. It's not uncommon because we move. Sometimes, people have made put the wrong address on the 1099 when they mailed it out to you, so you might didn't receive it. But they did report it to the IRS that they did pay you to do a certain assignment, a certain gig, and your income is understated by, like we just said, $3, $5, $10,000. What is that? What happened with that? because it was understated. Now you may have a tax liability, and it happens all the time. With that tax liability, or if it's like a trend or certain things, or if that happens, you may get a letter from the IRS. Let me back up a little bit before I go too deep into it. When we just to explain what a tax audit is, what a tax audit is when the IRS reaches out to you in regards to the actual information that you submitted to them on your tax return, and they just want to verify what you have. Um, Audits are very rare. Now, if you've been listening to the news, the IRS has been ramping up the actual amount of audits that they wanted to do. They said they were going to increase them about 50% back in 2022, and they just hired another. Is it 50 or 80,000 agents they're looking to have to work on audits and do different customer service, different other things with the IRS. Um, but it still rarely happens in proportion to the amount of people that actually file their taxes. So audits rarely happen. The issue that comes up is right now, especially in 2023, you have artificial intelligence that actual beats the human eye. I'm 20 years in the game, and I remember the first couple of years, it was maybe just like a random selection, and they may do a little tumble wheel and actually pick somebody for an audit. But what's happened now, everything's based on artificial intelligence. They're looking at trends. They're basing everything, the computers are looking at common industry expenses, things that are really out of proportion in regards to certain things, looking at trends that you may have from one year to the other. And all those things are taken into consideration now. So it's a lot easier now to get audited because the whole human aspect of it is out of the way. But what I want to do again is just share some of the common things that I've seen that have triggered audits with small businesses. And also, at the end of it, also kind of just give you a little guidance in regards to if you do get that letter from the IRS, not to panic, but what give you, some common steps in regards to what you should take just in case you receive it. Excuse me. But again, the first thing they usually trigger audit in small businesses is failing to report all your income. A lot of times, I know you see so many things on the internet. You hear people telling you you can get your small business and write off this and write off that and write off this and write off that. You're going to write your ass off into an audit. And that's what happens far too often, especially when you get advice from people that probably not credentialed out to give that kind of advice. And some may be, because some may be trying to just sell information or to get followers, but you kind of go into a danger zone when you're reporting things on your taxes that may be correct with doing it, but maybe some things that are missing with that. So you got to be very, very careful, especially who you get advice from. Okay, and the best piece of advice I can give you with that: try to find people that's going to give you the right advice instead of the advice you actually want to hear, because it sounds good and this guy's articulate, this guy's smooth, or this young lady has a lot of followers. Be very careful and investigate people. I'm not saying the best tax preparers are people with college degrees or certifications, but I will say this: you do want to have people that you can probably look at a little bit more credentialed, because again, they may not necessarily be so quick to give out advice because there's some kind of recourse towards them just in case they're giving out wrong information. What I mean by recourse, you can actually call somebody and report them. Somebody that's just talking on the internet that doesn't have any kind of credentials or anything behind them, just an old whale situation. So that's just kind of a quick advice for that. But again, that first thing that one of the first triggers for a small business audit is failing to report income. Again, guys, you got to make sure you have to keep proper books. I was asked today in regards to my opinion about people, using QuickBooks and things like that. I am an accountant, and you can try to do your own books, but never try to equate doing your own accounting books being the same thing as you keeping a checkbook. If you're not familiar with it, I would just pay a bookkeeper. Bookkeeper is extremely reasonable right now. I mean, especially with software, you can get somebody virtual. You end up paying anywhere from $75 to maybe $200 a month, which is extremely reasonable. Take consideration you're not hiring an accountant. You don't have anybody sitting in there. But it's just something to kind of keep in mind with going forward, because you want to make sure it's done right, because you cutting costs and not paying somebody that probably has a better experience with doing it. That at the end of the day, that $1,200 or $3,000 at the end of the year that you felt you saved, you may pay double that um, for representation, back taxes, penalties, and fees. So it's just something to take in consideration. Or you can be in a situation where you can actually, maybe shadow or pay attention to whoever doing your books for about 6 months to a year, gain some intel, gain some experience, and then if you want to take it upon yourself, you can do it. Or, like I mentioned, sometimes most small community colleges offer, like a 3 to 6 month QuickBook course that you can take. You maybe even become QuickBook Pro certified, but it's Pro Advisor certified. But I would err on the side of caution of trying to do everything yourself, because again, when you get in business, you know what you do, you know what you do well. You can't be the jack of all trades with everything, especially things that can cost you the end. We start talking about accounting, insurance, legal stuff. I won't be going on Google getting that stuff. Pay those little fees with it. It'll save you a lot of heartache, pain, and won't beat your checkbook is bad in the grand scheme of things. Just in case if something does happen. The second thing is, again, we're talking about how to avoid small business tax audit with triggers. How to avoid those triggers to small business tax audit. And the second one is large deductions and excessive expenses. Here's the deal with these large deductions. Again, I know you guys see it all the time. You can write off this, you can write off that. You got your LLC, get your LLC. You can put these particular things. You can get a vehicle. I was just hearing the thing with a G-Wagon, $6,000 and stuff. And everybody's like, ooh. The problem come up with that is, how the hell can you justify the purchase of this G-Wagon, that may be, I don't know, how much does the damn G-Wagon cost? But let's just say for explanation purposes, it's $50,000, $60,000, right? Regardless, let's take that whole weight aspect, which you can, because people look at the one is the 179 total expense that you can just wipe the whole weight of the whole purchase price of the vehicle because weigh over 6,000 pounds. The issue comes up with that is, how can you justify paying for this vehicle if you don't have any income coming in, or on or any kind of revenue, any kind of business activity? How do you justify that, right? Not saying you can't, because you have something called startup costs. But on the flip side of it is, then if the audit is triggered, they're going to want to see your personal bank statement. So where did this capital come from to invest into that? You got to be smart about it. A lot of times people will sit and I hear the people giving advice about you want to go on family vacations and you can put travel expenses and stuff like that. That's all well and good. You want to do that if you're doing business like that. The issue comes up again. Are you making comparable income to justify you paying for these actual trips? You submit a tax return for $3,000 vacation trip, $2,000 repairs to maybe it'll maybe be office repairs with maybe some things getting done at your house. You got all these different things that are listed on there, and you don't have any kind of other activity as far as revenue coming in to justify it. How is it done? The only year you can get away with it for the most part is the first year, because again, you have those initial startup costs with your business, which ain't uncommon. I get that part. But when we started talking about writing off everything that's on there, now you got this big old business loss, and then so you can get this big refund. I understand one thing about the IRS, because I did get the example earlier, 6 months to a year. They usually don't function like that. A lot of times it's like a lag, maybe a year lag, maybe a year or two lag. And when you get the letter, they're going to ask you to submit things that you don't know what the hell they are, unless you've been keeping proper books, right? And no one wants to get audited. Nobody wants to get that phone call. But if you're stuff together, you're stuff together. And it is what it is from that standpoint. But if you're just writing stuff down and you're using TurboTax or TaxAct and you putting the stuff in, and if you increase the expenses here, and you see that little refund getting bigger and bigger and bigger, the more stuff you lying about, please, you don't want the problems. It ain't even worth it. It's not even worth it, guys. It's not even worth it. So when you start putting in things that are told out of proportion or just overdone, you got to be realistic about that stuff, because again, I know there's a gray area when we start talking about what's justifiable with doing it. And like I said, usually that first year is nothing uncommon to have some, a lot of expenses and startup costs because you're new in business and getting everything together. But when you start putting in year 2, year 3 to do this kind of stuff, and you're not getting any activity and the money in, or it's minimal, so you're like, how in the world are you paying? You're not making any money because you're not making any money. So how are you putting this money, able to buy this equipment? You're able to keep paying for all this rent, all these particular things, and a lot of times people will put in their personal expenses, their apartment rent, their apartment rent. Excuse me 1 second. Car note, car lease, things that are not necessarily attributed to the business, and it come back and bite you in the butt. And those are the particular things I think a lot of people should be trying to avoid. Hold on 1 second, guys. We'll make sure everything's square on this end. Cool. All right, good. But you have to be very, very careful of that. Be very, very careful, because I hear it far too often, people telling folks to write this off, write that off. You can include this, you can include this. I see the videos all the time. If you're not hearing an accountant say that, somebody certified, again, I'm not saying they the only people can give advice, but those are people that they have some kind of recourse that you can call, call back. I mean, a report. So they may be they would be a lot more reluctant to just give freehand advice, because somebody has actually been credentialed out, certified, or whatever. They've usually went through some kind of training where they can kind of look at not holistic responses. And what I mean by holistic is understanding that whatever your situation and the next person's situation will be totally different, because one person comes in with a certain amount of income, one person comes in with a certain amount of expenses. This person has dependents, that person don't, and everything changes depending on what the situation is. So I would just err on the side of caution with that. Please don't get a celebrity confused with expertise. Please don't do that. Just competence is very, very important. And I think in the era of social media, a lot of people, skip over that because this person is popular. I think a lot of times you start doing some Google search, you start finding out some things about people. It may make you a little reluctant, but I'll bounce off that, because like I always say, I'm never too big on really talking about other people's business and everything like that. But I always, real big proponent of you make sure you check the people that you're actually dealing with. But those putting in all these particular expenses, writing these particular things off, and if there's no kind of justifiable revenue or income coming in like that, that's a quick trigger for to put yourself in position to get an audit. Another audit trigger is claiming businesses losses every year after year after year. Listen, who the hell gonna be able to stay in business? You keep writing all these big, massive losses, 15,000 this year, 20,000 next year, 30,000 next year. How can you justify it? How can you justify it? Those are the kind of things that are gonna be one of the first things to come on. Hey, I appreciate you tuning in. Appreciate you tuning in. When you have those losses year after year after year, you have to be realistic to just say, like, listen, this is not just going in a particular spot. It's it's being hubbed out or tracked for following years. So just don't think when you file your 2022 taxes this year that they still aren't, gauging everything based off what you did on your 2021 and 2020. Why? Because a lot of times when you make equipment purchases or things that require some kind of depreciation, things like that, those have to be tracked over certain periods of years, right? So it just doesn't go away. That's still in their system, right? You have to kind of keep that in mind, especially if you have a loss, because your loss can be rolled forward to future years. So especially if you're using any kind of tax software, that tax software is saving the actual loss you have and rolling it forward and applying it to the next year. So all those particular things, you may not understand that because you're using the TurboTax or the Tax Act or H&R Block software. You're just seeing the Q&A portion of it, and then the numbers changing in the corner. But you might not necessarily understand the big picture impact. I know a lot of times in the softwares they'll have a year-to-year comparison. You can see what you did, like probably over a 3-year span as far as income, expenses, and things like that. But the IRS is keeping track of that, and it's kind of hard to explain how come you're still in business with all these massive losses. Like, how are you paying the rent? How are you doing it? You only have so much, and especially when if it's like a single owner LLC or a sole proprietorship, because why? Your personal income is tied to it. So now they're saying, like, listen, this person actually was able to buy write off all these expenses, spend all this particular money, and still don't make that much on their personal income, to justify where this money went. Right? And then they're not seeing any kind of retirement funds or brokerage accounts that's been cashed in or anything like that. So it's going to ask, where's the money coming from? Doesn't mean it isn't legitimate. You might have got it from somewhere. But once the audit starts, now you got to sit there and explain. So why put yourself in that position? Just got to think sometime, okay? Or you got to think. You have to think. Remember, proper record keeping keeps everything together. You just want to make sure you got your books together. You want to make sure you got everything locked in tight. So whatever you're putting down, whatever you're putting on your tax return, you want to make sure you got some kind of corresponding documentation to substantiate it. That's all I'm saying. All I'm saying. Please, please, please get out from the way of just looking at, hey, I can write this off and write that off, right there. You have to be able to justify it. Because if you ever go through an audit and some of that stuff is found fraudulent, it can be catastrophic for you. And you don't want to put yourself in a position where you spend the next 2 or 3 years, maybe longer, trying to get out of the hole because you got this big refund, and now they pull this audit on you. Now you got to get all this documentation to justify it. You got to be careful. Be careful. I'm always going to tell you one way to do it. That's the right way. So again, make sure you got proper records. But again, those claiming business losses over year after year after year after year, it's going to be tough. I mean, again, remember what I told you. Maybe a couple year lag in regards to them actually touching base with you. So you getting a phone call in 2020, not a phone call, but a letter in 2023 in regards to your 2019 taxes. You don't remember that. You don't remember. And that's what you see that so much with people with the PPP fraud and disaster loans and stuff. They're hitting you up, asking you, because a lot of times people just filling out stuff. I just want to get this bigger loan or whatever. And then they get these letters, hey, turning this form, turning that form. And they don't even know what the hell it is, because at the end of the day, everybody was just playing make-believe and putting stuff on paper to get a certain amount of money back. And it come back and bite you in the butt. So do it the right way. Do it the right way. The next thing is S-Corp shareholder employees earning low or no salaries. This is very important, right? Because let me tell you something. I've seen tons of videos on the internet in regards to S-Corporation, subchapter S-Corporation. Here's the thing, theoretically, when we look at what a subchapter S corporation, guys, if you're not familiar with it, the thing with a subchapter S corporation, I'm trying to give me 1 second. I want to put something in the actual chat right quick. Again, I'm Deonte Burden, aka Mr. Short Dollar himself. You listen to it's not the dollar hour, do a live feed in regards to how to avoid these small business tax audit triggers. These are the ones you need to avoid. These are very common for people to put them in, to place these. A lot of them by accident. When I say accident, man, I necessarily know they may have thought of what they were right, may have heard they were right, or they just wanted to get a refund or get some kind of benefit from doing it. But these are I want to go over some ones that I have experience of knowing about from me being a tax. Being in tax business, been accounting over 25 years, been in business of 22 years. Just give some examples of some common triggers in regards to tax audits for small businesses. And I was getting back to that subchapter S. We know theoretically subchapter S is just a corporation. It's just like an LLC. They're flow-through entities. What I mean by flow-through, when you file the taxes form, the actual bottom line number, revenue minus expenses, that profit goes through, and that form is reported to the IRS, what was done on it, and that profit or loss is dispersed out to the different owners of the LLC or the S corporation, because it's the flow through. The benefit of a S corporation is that one of the benefits is that that bottom line number, the profit, is only subject to federal taxes, where the LLC is subject to federal taxes and self-employment taxes, or i.e. Social Security and Medicare. And a lot of times I've seen a lot of videos where people tell you get an S corporation because you'll pay less in taxes. This is what they don't tell you. You have to have someone getting a wage in that S corporation. Wage. A wage is not a 1099 employee. A wage is somebody getting a W-2 where you're paying Social Security and Medicare. Most small businesses don't want to do that. Why? Because they're going to be on the hook of reporting that 941 every quarter and letting the IRS know we have employees and we're paying payroll taxes on them, right? But that's one of the things about it. When you have that S corp, you have to have someone that is getting a wage. Period. Period. And when you don't have someone doing it, and the wage has to be in proportion to the actual money. You can't have a business that's making, let's say theoretically, $100,000 a year, and they have $30,000 in expenses, but you're paying overhead expenses, but you're only paying the actual officer, whoever the person is getting a wage of that particular company, $1,000 a year. It got to be in proportion. It has to be in proportion, guys. Again, like I told you before, a lot of these audit programs are set off AI, artificial intelligence. You put yourself in a bad space. But those S corps, and this was a big crackdown. They started maybe, I think 3 years ago. Now, a little longer than that because they were pushing it, maybe 5. But they started pushing it hard, probably a year or two before the pandemic came. But there were a lot of people, getting into S corps. I seen tons of videos with people pushing folks to get an S corp because of that reason. You pay less in taxes, which you do. But again, you have to have someone getting a wage, and it has to be a relative wage in proportion to how the business is doing. You have to make sure that, guys. You have to make sure that, guys. It's not worth it trying to cut corners. It's not worth trying to cut corners. But that is a big trigger. When that 1120S for the subchapter S is filed, that's one of the things they look at in regards to the, what it was paid in wages. Remember, 1099s are not wages. That's just what you paid out to independent contractors, okay? So they want a W-2 employee, okay? And someone that's paying your reporting quarterly tax on that 941, and most folks don't want to do that. Why? Because you find out very quickly when you start doing payroll taxes, the company has to pay it, and then you have to what is not necessarily even what the actual employee is paying in taxes. The company has to match that with paying it. So you're turning around doing that for yourself. It's like you're paying double whammy on your taxes. Those rules, I don't make them up, but you can't get called foul on the game when things don't work the way you want it to work. If you're gonna do it right. If you're not gonna do it right. Don't do it at all because it's not worth it with the actual headaches and pain that you're going to, encounter with doing it, cutting corners. Okay. So, that subchapter S, self-employed, that it has to be a wage that, and again, it has to be in proportion. Okay. Again, we're talking about avoiding small business tax audit triggers. Again, these are ones that I've seen a lot of over the years. Just want to kind of have a quick feed to talk to you guys about it. The next one is this, when people go crazy on the mileage law, they say that they drove a gazillion miles and stuff on their vehicle, but they don't have any kind of money to justify it. Like, how in the hell did you drive this much with no gas money? And that's one of the biggest things that, and I can honestly say I had a client, this was way back in when I first started, I'm thinking maybe 05, 06. I remember this conversation vividly. And I'm telling the guy, like, listen, he giving the mileage law. Listen, man, this doesn't look right. This is what I had. Now, again, he's giving it to me. I'm being, the accountant, looking over it and everything for his taxes. I can do but take what you give me. He said, no, this is it. So we wrote down the mileage. He filled everything in. He submitted it to me. Everything signed. So I have what he's giving me. I don't do the, figuring out stuff for you. So we got the mileage law, put it in, and he got a call. He got an audit from the IRS. First thing he wants to do is tell the people the tax man did it. First thing come out of their mouth. No, the tax man did what you submit the paper. And it's that easy to show them, hey, listen, this is what he gave. This is what he signed. We're done with that. But my thing then is my thing now. Again, how can you drive all these miles and not making the money? Remember what I said again. Maybe the first year when you're first starting up, you're moving around and doing things like that, but it has to be in proportion. Especially you start talking about businesses like courier, delivery, towing. People want to write all these kind of mileage out, but again, they don't want to report what we said the first one was all the income that they made. You got to be smart about things, guys. You got to be smart about things. Um, how can I put it? It's kind of like, when you're dealing with maybe law enforcement or judges or lawyers, like they've heard every story already. So you thinking you got a slick story or something like that? I mean, they've heard it before. They know how to assess people when they lying and things like that. And it's kind of like that, that's what goes on with your taxes. They have people in place that have seen things, seen certain things, and certain things don't match up, which causes a lot of that stuff. And people just, I guess, try to play dumb with it. And those mileage logs you put in, you done all these particular moving around and driving and stuff like that. But again, there's nothing in proportion to show that was as far as revenue that even happened. You can't sit here and just say you done drove all around the globe and you have no money, to justify it. Outside of that first year, it may be some things, you may be a couple years down the road where you may be doing expansion and things like that. You got a cash infusion because you got a loan or something like that. I get it. That's why it's so important. You got your books in place. So if somebody does come back with an audit and say, what is this? Hey, we got a loan from the SBA. We just got, a line of credit. We want to actually, increase the size of our business. So that's why we bought some more equipment and things like that. But you can justify that because you got a cash infusion in. But you don't have that. You just have, you're self-funded and things like most small businesses. But you have, a nominal amount of money that you made at your job, but you have the exorbitant amount of expenses that you wrote off on your business because, that's what it was making the most money when you was doing the data entry side of it on your tax return. Gotta be careful. Gotta be careful with that. Again, we're talking about how to avoid some of these small business audit triggers. These are some ones I've seen all the time. And lastly, guys, this was one that, I know people don't think about it when they're doing it, but if you stop for a second and just think about it, you realize how silly it is. It's those rounded numbers. Those rounded numbers. What I mean by that, you see a tax return, 2,000, 3,000, 5,000, 1,000. What the hell? Nothing is that. Every now and then you may have a common one, maybe like rent. Rent you pay, $200-$300 a month. So that may just be a rounded number. But for the most part, you're not gonna see items ending in 0 or 5. You're just not gonna see that. And I'm telling you, you want to get audited, have a sheet full of those. Have a sheet full of them. Those everything ending in a 0 with doing it. And can it happen where you have some expenses in 0? Absolutely. Like I said, one of the things that's come out naturally, maybe like a rent expense because you got the same amount coming out each month. Just say if it's 100, 200, 300 or whatever, 100, so it's 1,200 for the year. I get it. But overall, for the most part, you're not going to get rounded numbers, right? That's not going to happen. And people will have a sheet full of them. We get it on the financial statement like, listen, man, again, listen, because at the end of the day, even if you get audited, the EFIN number from the tax preparer, that gets pulled as well. So now they're looking at everybody that we filed, all our preparers looking at trends from the EFIN, see if that's something common on our end. As far as, the taxes we're doing or even like the preparers I got, is it kind of something common in regards to where these numbers are flowing? So just like the auditing you, they may do like a soft audit or investigation in regards to what we're doing. So I don't need to bring that kind of heat to myself. So that's why I say and just tell you with me looking, if I got a good sense something don't look right, I'm going to ask you because that's the proper due diligence that any preparer is supposed to take. But, you're looking at like, hey, man, this is not right. And if I got a good sense, the good feeling that I can just shake that note and that this stuff is fraud or just something wrong, I just ain't going to take it. I ain't going to take it. It's cool. I want all the money I can get, but some money ain't good money and I don't need it, That probably one of the perks being in business 20 years. I can kind of, won't say it's about picking and choosing, but it's definitely picking out not picking headaches. That, sometimes when you're so hungry, you can't turn stuff down. I really don't entertain that kind of stuff now. So you want to make sure that you're very, very careful with those rounded numbers. That's probably one of the most common things that started. Those two things, those Schedule C's. It's already going to kind of just raise it up anyway, knowing that you have a small business. Okay, small businesses are going to get audited the most, right? They're anything. That's you like what triggers it, and then those rounded numbers. Those rounded numbers, I'm telling you, okay, those two key things. If you got a small business, you use the schedule, you see everything legitimate, great. We're just talking about things that are common triggers to create audits. Okay, using the Schedule C and rounded numbers are two probably the most prevalent ones with doing that. Okay, now with that said, guys, we're gonna spin the wheels and talk about what if you do get that letter? What if you do get that, get notice from the IRS? What should you do in the event of an audit? Number one, don't panic. Don't panic. And I know it can be frightening with getting it. Hell, I can just get a letter from the IRS and everything, and I'm like, what the hell is this? And it can just be like, hey, Mr. Burden, just following up to make sure, whatever. Nobody wants to deal with it, right? That's one organization. If you ain't got to hear from any part of your life outside them giving you some money, who the hell want to deal with them? So I understand that aspect of it, right? But what I will say is that if you get it, stop for a second, pump the brakes, and just try to strategize. If you have your books in order, you got everything together, great. If you know you don't have it, don't sit there and start wasting time trying to go in there with some funky story in regards to this what happened. I didn't have these things, because they're going to ask questions that you're not going to be able to answer because they're trained to do those particular things. If you don't have it, hey, listen, I don't have it or whatever. You can go from there. You can also get you like an enrolled agent or a tax accountant. I'm not to represent you in regards to that. Enrolled agent, EA, they can represent a client, or even file an offer in compromise where you guys might negotiate a particular thing. Hey, I appreciate that. Thanks a lot for that. I appreciate that. Thanks. You see, met one of my goals. Thanks. Thanks, S. Turner. I appreciate that. Thanks a lot. I'm about to lose my train of thought. I'm sorry. Thanks a lot. I appreciate that's on the TikTok. One of my live goals was met. But yeah, you guys gotta when you get that letter from the IRS, just in case of audit, decide if it's something that like, listen, I'm just gonna go there and they tell me I owe some money, I'll get it fixed. But if you want to get representation, tax accountant or an enrolled agent, they probably gonna be they're gonna be pricey with doing it. But if it's something that's gonna be complicated with doing, you don't want to get into trying to explain to them, because here's the deal. How you doing, Nicole Anthony? You're quite welcome. You're quite welcome. Again, you're dealing with people that they train to catch you in lies and ask for certain things. If you can't answer and respond to them comfortably, that's the kind of things can make things worse from you. And they will let you know very quickly, look, we got everything. We got all your income information. We got all this kind of stuff. Just talk to us. And one thing I will say this about the IRS, and just with dealing with them over 20 years, could you get one of his words, jerk or whatever like that on the phone or deal with them? Yes, you can. But for the most part, you're dealing with people that just want to, go to work, come home, and just be done. I say all that to say you can sit there and just be straight up with them a lot of times and just, hey, listen, I know what I'm in, try and get it fixed, and you can get it fixed. The issue comes up a lot of times is when you start getting these letters, you start getting some kind of notice, and you act like you didn't get it. And you figure out that, hey, say to yourself, hey, listen, I know I got something over my head. I know I, owe them some money. I know that, they trying to audit me, but I'm going to take care of it, once I get paid or once these other things straighten out. That's not the way things going to work. Understand that they're one organization that can shut everything down. You've done that hard work for 2 weeks and you're ready to go get your paycheck, and you got this letter, this thing say gone on your check stub. And damn well you don't want to deal with a GARN, because what's the problem with that? You got to call the IRS, and you ain't getting nobody on the phone 90% of the time. You got to call early Tuesday, Wednesday morning to get somebody on the phone. So during the whole time, you have your check garnished. You can't call them to get everything straightened out, and you stressing like, I don't know what we're doing that. Stay ahead of the curve. Have proper communication with doing it. Okay, stay ahead of the curve. Because most times you get a letter, they'll probably give you some an agent or somebody a number where you probably can get somebody a whole lot quicker. But if something gets stuck, you might have to go back to the whole, the basic line We're trying to get everything taken care of. You know me, I'm always gonna tell you guys be proactive. And like I said again, do everything the right way. I ain't gonna be sitting there giving you tips. Write this off and do that kind of stuff. No, no, no. That's why we've been in the game so long, because we don't sell BS to people, right? So I just want you guys to understand those triggers. Let me rehash the list again. Again, we're talking about avoid these small business tax audit triggers. The first one being, understating and not reporting all your income. Understating and not reporting all your income. Make sure, guys, that you keep proper books, proper records of the jobs you did and everything. I don't care if you did something for somebody, maybe like a couple weeks. Just for a couple weeks, maybe a month, a day or two, because a day or two job can be a couple $1,000s anyway. And you just forgot about it. You take your stuff to the tax lady or the tax man, and you forgot about it, right? You got these some assignment financial reports going on, and that's what you think. You might be looking at your bank deposits or what you have, that kind of accounting, and you turn it into the tax person, but you forgot who sold you, you forgot who cash apped you, you forgot what you got in PayPal, you didn't report all that. But those people are like, nah, we paid them that. They submitted 1099s, and next thing you know, everything's off because you didn't go to all the different channels where you had money coming in that, somebody maybe paid you cash. So make sure that you have proper records to list all your income that you do have coming in. The second one is, what was that? Large deduction or excessive expenses. Be very careful there. Again, we're in the world of, I can Google it right now or go on YouTube, top small business write-offs or write-offs for small businesses. And people going to just list all this crazy stuff on there, and it may be legit. Let me stop. They're probably legitimate deductions and expenses. They're probably legitimate. The issue comes up is what? Everything still got to be in proportion. You can't have $50,000 in equipment, $20,000 in rent. What's the ones everybody on the internet? Travel. You got $10,000 in travel, and you just grossed in a couple $100 damn. How the hell you pay for it? Right? How did you pay for it? Right? So you sitting there looking at the IRS is looking. Okay, this person is not reporting any kind of interest income on a personal side, like they just got this big money in savings. So where is this money coming from? Like I say again, that first year you can get away with a lot, as far as they're not going to scrutinize you as much, because why? Maybe basic startup costs. You got a loan. You doing that stuff over a certain period of time, putting yourself in a bad space. Guys. Again, they're hiring people to be scrutinized this particular stuff. So don't put yourself in a position where, like, look, man, I can't even explain or justify this stuff. Let me go through my little funky notes. The other one, claiming business losses year after year after year. Again, you got a business, you've been in business over sustained amount of time, several years, and it's always a massive loss every year. Every year, some kind of massive loss. And remember, well, like I told you before, when you put certain things on your taxes, especially we start talking about bigger assets, property, vehicles, things like that, you get that depreciation, that stuff's still locked into the software. So a portion of it this year, another portion this year, another portion of it this year is taken out. And all the while you forgot about it because you just answered the question on TurboTax. And before you know it, you get that letter because how can you do this? Where's the money coming from? How in the world are you putting out all this money, but you got none coming in? What are you doing? How are you doing it? You may have everything. You probably don't. So just be kind of smart about that. The subchapter S, employee earnings are low or not even there at all. Remember what I said, you got an S corporation. You see the videos all the time. You have you'll pay less money in taxes with an S corporation because you don't have to pay the self-employment taxes. Totally right. But you have to have somebody getting a wage. Remember what I said, not just somebody getting a wage, but a wage got to be in proportion to what the company is making. Got to be in proportion. You can't be making $100,000 and you paying somebody $1,000 a year in wages. Remember, wage is a W-2 employee. You file a 941s every quarter, right? Not a 1099 person, a contractor. That's not employee. That's a contractor. They want an employee of the organization. Keep that in mind, okay? Another one was going through my little funky notes, everybody. That mileage law. Totally overstating that mileage law. That will get you in a lot of trouble. You saying that you've rode all these tens of thousands of miles, but again, we're going to look at the revenue or the income that the company made is very, very normal. Don't do it. Don't do it. Don't do it. Don't do it. Okay, be smart about that. And last but not least is dreaded rounded numbers. Again, you getting all your whole tax return, 5,000, 10,000, 1,000, 3,000, all that kind of stuff. What they bill like that? What do they bill like that, y'all? Is that just a lucky draw that all your expenses from meals, equipment, office supplies, utilities, everything ended up being 000? It's not gonna happen. So be smart, guys. Be very, very smart. What's going on, PJ? See, one of my sons are tuned in. Be very, very careful of that. Because again, the IRS is like one of those, things your grandparents warned you about. The trouble is easy to get into, but it's hard to get out. And again, it can be very, very hard in your pocketbook if you don't do the proper steps. We'll make sure you have all your books in order and things like that. Okay, so I just want to share that with you guys in regards to avoiding these small business tax audit triggers. I hope the information was advantageous for you guys, and hoping everybody has an awesome tax season for yourself and your tax preparers as well. With that said, I'm going to open the floor up. So if you have any questions that are business or business related, I'm here now. You got me for a few minutes and stuff. So feel free to ask me a question if you got any questions. Let me scroll up. This ain't that one. This ain't that one. Asked what are some new grants for veterans? It's no really new grants for veterans. I mean, remember theoretically, guys, I'm just be honest with you. Grants for credit solve problem. You can go to Mr. Short Dollar on YouTube. I got, I think, 2 or 3 videos in regards to different grants or federal programs in regards for veterans. You even go on grants.gov. But remember, grants, I think everybody have a distorted view on grants. And when we run across them, we're going to share them with you guys. Any kind of opportunity for they can give people any kind of, or assist people get any kind of access to capital. We'll post it on the video. But you'll see how these people post my grant. Grants are hard to get. I'm just be straight up real with you in regards to grants. It's not like, when the pandemic, you just say your name and they've seen some money. It's not that many. There are a lot of good programs for veterans, as far as getting into business and things like that. But I would say you can go to Mr. Short Dollar, check out even one of the basic grant videos. But even we got several videos for grants. I'm a disabled vet myself, so I'm always looking for different things that I can help people that are actual vets that they can benefit with doing that. But I would definitely tell you that you grants.gov. You can go to your local municipal. I always say work the inside out. Local municipalities, and with that being like wherever you get your business license at, your county, your state, to check. But it's not that many. It's not a lot of grants for men either. I got to ask that question because, God, I forgot. We just posted a video last week about, I think, a $10,000 grant for Black women entrepreneurs. A lot of these corporations, they'll offer these particular grants, just like they have the ones for sisters. And a lot of it is I think they're offering goodwill, but they're also it's marketing too, because they have people that actually spending money with them, and probably the demographic of Black females and Black female entrepreneurs spend a lot, not in a negative way, but it's just from an activity standpoint, spending, being active and doing certain things. From a marketing standpoint, it behooves you to kind of have a relationship with them. So if they can turn around and do that, that'd be a great place, for them to actually put money. As far as with that demographic of Black women entrepreneurs, I think that's one of the fastest growing new entrepreneur group with doing it. It's not the largest one, the fastest one. So if they can get on the front end with having a relationship with doing it, that's why those particular opportunities are there. This ain't the one. This ain't that one. Got Hello Alice. Yeah, Hello Alice is a good site, but Hello Alice, we will, when we see grants come on Hello Alice, we'll post them. But they're always going. It's typically, again, it's still only going to be one or two grants listed, and they typically don't have grants for veterans. Every now and then they may have one. where veterans may fall into it with doing it, but they typically don't have one for veterans. But I will tell you this: we did put a video. If you haven't seen it, we did a video about, I think it was December. The SBA part is partnering with the VA for veterans in regards to want to start businesses and stuff like that. And they're not necessarily getting grants, but they're getting a lot of assistance in regards to, different classes and things like that. We're doing it. I've got the SBA loans. I mean, prior to COVID and everything, several. It's a very grueling process, and nothing like the ones that it was getting with the disaster loans. But it is advantageous for veterans to be able to get it. But I will always tell people, go to your Google and call your local SBA office or Small Business Development, SBDC. Again, that's Small Business Development Office or your local SBA office. It's free. Your federal tax dollars pay for it. Get you a counselor and let them know what you're trying to do. They have a big database. The SBA does with those counselors. They have that whole database that they can actually help. Just like I mentioned, going to grants.gov, they have that database to help you kind of scour through some of them opportunities. What we got here, Nicole Anthony. Can I claim losses if I just reinstated my business? You can claim the loss if you reinstated the business and you claim the loss. It just got to be illegitimate. When you say you reinstate, if the business has not been active, right? That's just the theoretical. You tell me if I'm off base on what I'm looking at, because the question is, can I claim losses if I just reinstated my business? The theoretically, if the business has not been open, there were no losses for it to incur. But if you reinstated the business and you didn't do any activity, when you say reinstated, you maybe if you're talking about just more of a legal standpoint, the business license expired, but you still were doing everything, the license was expired, you can do that. But if you were actually talking about a business that you haven't been active with in years and you want to put expenses on it, no, you cannot. No, you cannot. But if you were actually in business in 2022, you didn't take care of the business license by, just say March, the first quarter. Most we're here in Georgia. Most counties will want you to pay your business license by March 31st or April 1st of doing it. And, they, for whatever reason, may have canceled it by the summertime if it wasn't done, but you still were active in the business. And then it came to fall, you got everything caught up, you got it back reinstated, but you still operating the business? Yes, you can. But if we talking about that's just been a dormant business with no activity or anything like that, and then you go try to put losses on there and nothing was done, no, you can't. No, you can't do that. Let me know if I'm answering your question. I'm looking at it from the right perspective. I just want to make sure I'm giving you the right advice in regards to what you're asking. What we got, this ain't that one. Yes, sir. Thank you. Okay, cool. I appreciate I was able to help you. But definitely go to Mr. Short Dollar on YouTube. That's my main hub. Okay, that's the we on all these different platforms. The main hub is the Mr. Short Dollar YouTube channel. We got over 600 videos on the YouTube channel. Got a grants playlist for over 150 grant opportunities. But everything's segregated in regards to entrepreneur playlist, finance playlist, grants playlist, small business, speaking, different stuff we got on the YouTube channel. But check out the videos. The videos on the grants playlist, the financing playlist, a lot of those programs. When I run across those programs, because I'm not, I ain't getting any monetary for it, but we just, want to be out here helping everybody. But when we see it, we'll post a video about it. But check out those actual playlists. Again, go to Mr. Short Dollar YouTube, subscribe to the channel, hit a bell to get a notification each time we upload a new video. And then from that point, just go through the different playlists and take advantage of all the great information we got on there. Okay. Mr. Anthony just responded. I have been active, but it's not been active according to the government website. The business license is expired. And can I claim the reinstatement? Okay, again, when you say I have been active, the thing that goes in with that, when you've been active, but just again, if the license has expired, if the license expired, the business active, you've been filing the taxes, right? When I say dormant, we're talking about different periods. Over several years, you haven't been doing anything with the business. You haven't been reporting the income. You haven't been reporting it. the license has expired, no income or anything been reported to the IRS, no, you can't. But if you go through, let's say 2022, and you did not pay for the business license to get, renewed, and then a couple months later it expired. Then a couple months after that, you pay to get everything reinstated. Yes, you can. Okay, and you put in a reinstatement fee. But if it's been a dormant business over several periods, you can't do, because again, it's no business to do that. Now again, you want to start it back up anew and say that when you reinstated it, you didn't do anything in 2022, but renew, you get the business license reinstated. Yes, you can. You can write that off, but put things on there and it hasn't been active and stuff. Now you can't necessarily you can't do that. Okay, and I apologize. And I'm answering this the best I can with the information you're giving me. But I think I'm on the right spot with that. I know you said I have been active. But it's not active according to the government website. It all depends on the period, whatever, that it has not been listed as being active. Because you being active, you being busy, you're not reporting you busy, two different things. Because again, if you've been functioning your business for a couple of years and you haven't not been reporting that stuff to the IRS or what you've been doing, you ain't been in business. You just been hustling, right? That's all it is. That's just keeping it real with that. But if you've actually been in business and you've been reporting the income, and there have been some things that weren't done in regards to a compliance standpoint, as far as your business license or being set up with the state, you can always go put that stuff right off the late fees for the reinstatement. But you got to make sure you have some kind of continuous reporting with that, because again, in the advent, someone does reach back out to you and ask you, hey, listen, what's been going on? What you been doing with the business? And you don't have nothing substantiated, just put yourself in a bad position. It ain't worth it. Excuse me, ain't worth it. That's just being honest with you. It's not worth it. I want to do it the right way, and not the probably the best way, not our favorite way, rather. We're doing it. I hope I answered your question, Miss Anthony. I appreciate you tuning in as well. Anybody else got any questions? You got your boy here. You got me here. Oh, excuse me. With that said, let me throw that up. You guys, I'm gonna put a link. Guys, you can go to my and I'm sorry as far as Instagram and TikTok. We're not at the show, so I don't have anybody moderating for me to put anything in the links and stuff. So y'all please forgive me, but you can go to Mr. Short Dollar on YouTube. Every video that I do have in the description section got all my contact, all the contact information, even the number to the office, if you want to book a consultant appointment or anything like that, all that information. So any video on Mr. Short Dollar on YouTube has all our contact information, all the social media platforms, the actual my accounting business, Majestic Business Services, the website there. Contact information there. You want to book any kind of consulting appointment, tax preparation appointment, all that stuff is there. But I do want to share with you guys, I did open up my Mr. Short Dollar Tax Business course. I got the course I started. Basically, quick summary. And I do a live feed about the course later on in the week. And I've done a couple of them so far. Basically with the course, what we do is I don't teach you how to fill out certain forms or anything. I just share what I've done over the past 20-some years in regards to how to create, set up, and run an effective, efficient tax preparation business. I give examples on how to do it from a brick and mortar physical location, how to do it from a remote location. My business exploded during the pandemic. Why? Because we were offering remote and virtual services 4 years prior to the pandemic using Google Hangouts and things like that. Most people didn't want to do it because they're like, what is that? What is virtual and everything? But when the pandemic hit, when everybody else closed, we exploded because we were offering those particular services. But pretty much showing you from a marketing standpoint what you need to be doing year round to market to your clients, keep client retention, create a referral atmosphere. From an office standpoint, for the moment somebody walks in your door, sits down, processing, leaves out, maintain a relationship year round, all those blueprints are set up with that. How to get set up, and even with the IRS and as far as training, things like that, insurance, All that information is given in the course. I put everything that I've done over the past 20-some years. I include all my forms in regards to intake forms, marketing materials, things like that. All that included with the course. Go to Mr. Short Dollar on YouTube. You should see the link if you want to get into tax preparation business. That is there for that course. Okay. Let me answer the put. Yeah, you answered it well. Thank you so much. I appreciate you and your value expertise. Now, listen, my pleasure. And I appreciate you tuning in. Anybody else got any questions, family? Anybody else got any questions? Well, listen, I appreciate you guys. It's midnight here, and I appreciate you guys tuning in. I just want to run my mouth and be able to help everybody in regards to information. So the only thing I will ask you guys, if you haven't, please share the YouTube channel and tell people about the YouTube channel. I think we're over 25,000 subscribers on YouTube. We're probably all together, all the platforms, over 100,000. But we've been able, to grow like that over the past couple of years because, helping people and doing good stuff and, spreading truth in the kind of finances and things like that. So from the bottom of my heart, I want to tell everybody thank you, and I appreciate you guys. And make sure, be careful what you're doing this tax season because, again, you doing it yourself, you hiring somebody, remember what you're giving them, your name, your social, your bank account, maybe your dependent, same information. The main question we all get asked first thing, what you charge? And again, the cheap man can't afford all that spyware. The cheap man can't afford all that liability insurance. So I'm just saying, don't necessarily err on the side of, who's the cheapest. Get who's the most competent, whoever you go to. That's what I mean. I'm not going to be no big proponent of come see me, get your taxes done. If you want to get them done with us, great. But if not, I just want you guys to make sure you ain't going in a direction where, somebody charging $40, $50 and, to do it. And they don't have that stuff in place. They don't have the auto protection. They don't have the liability insurance. They ain't got security system set up, to make sure nobody break in and hack your account, take your social security information or your bank information. Why? Because they ain't charging no damn money. I mean, they're just being honest. And market price for tax preparation, you can Google this. That's usually anywhere from $300 to $500. Just market, depending on where you're at in the United States. That's market. So those things can be Googled. Anything lower than $300, I will get the hell away from. I'm gonna be honest, unless it's one of those sites where you're doing it yourself. But actually, a preparer doing it, I'm just giving my personal opinion because I just can't see how they could, pay to have systems in place to protect you. That makes sense. I don't see you can't. I just can't see them making enough money or charging enough to have liability insurance and things like that. Okay, I'm not knocking anybody, but I'm just speaking in regards, just make sure you protect it when you're doing your stuff. Okay. Well, listen, guys. I want to tell you again, thanks for tuning in. I appreciate it. I hope we get some great information, you guys. Love you. Be safe. And I will talk with you soon. Oh, yeah. Tomorrow, what's tomorrow? Tomorrow, the dollar hour will be like we do every Thursday. Tomorrow's show, we're going to be talking about, and since it's Black History Month, and this is a show we did a couple years back, do we need black-owned banks? Again, that's going to be the dollar hour. I'll be at a Misfit studio with DJ Lab tomorrow, but tomorrow's show topic is, do we need black banks? I'm going to get my spiel, and we'll have a call in going, so you can actually call in tomorrow to the channel. So check out, we'll be on the different platforms, but I had the numbers posted. You can call in and we can discuss it. Do we need black-owned banks? We had that conversation in regards to if it's needed, not needed, what's your opinion on it, how you feel about it. I'm going to ask why. But definitely 8 p.m. Eastern Standard Time on the dollar hour, we'll be talking about, do we need black-owned banks? Guys, again, make sure you tune in tomorrow. So go to Mr. Short Dollar on YouTube, subscribe to the channel. You can get it. But we'll still be streaming on all the other platforms as well. So y'all take care of yourself, be safe, and I'll talk with you soon.